Joining us here in San Francisco is Sumeet Jain, a principal at CMEA Ventures. Before coming to CMEA, Jain worked for Goldman Sachs in its technology investment banking group. Welcome to Bloomberg West.
Thank you.
So obviously a bad few days for the markets, tech among the worst performing sectors. Going forward, how do you think technology is going to fare?
Technology is going to perform well. There's a couple of reasons. One is it is one of the few sectors that the United States is extremely competitive in and is a leader in. And it's a sector that we are innovating in, that whereas in many other sectors we're lagging. And so that's a fundamental reason. The second big reason is that it is one of the only areas of growth that investors can look to.
So when you see these numbers today, do you think that's just short term?
Yeah, I think there's two things. One is a lot of it is short term. The second thing is, there's a lot of exuberance in the sector, and you saw one of the companies that's had a lot of exuberance report earnings, which, while on the surface looks good, really when you dig deeper, it's not a strong indication of the incredible growth that's expected.
I assume you're talking about LinkedIn.
That's right.
LinkedIn obviously slid today. It's been downgraded by two different banks in the last 3 weeks. Is that a concern?
I don't think it's a concern for the sector as a whole. I think when you see companies go public at the valuations they're going public at, the expectations are that they will perform extraordinarily high. And it's a company that delivered just north of its expectations and wasn't a skyrocketing first quarter.
Do you think the trouble in the public markets is going to in any way affect the venture capital industry? Are they going to be less inclined to pour such huge amounts of money into these technology startups, not knowing if they're going to have a great exit?
Not in the short term. I think over time things might trickle down if some of these companies underperform. But the reality is there's quite a healthy pipeline of very good companies left to go public, very good companies that will be acquired, and that's all going to continue to generate liquidity, which is going to continue to attract investment in the sector.
So what do you consider a very good company? Like, give me some examples of the companies that you are optimistic about.
Sure.
Private companies.
Yeah, I mean, there's a lot of companies that everyone talks about, which is, the Zynga and Facebook, and certainly the very well-known companies. Then, there's another whole class of companies that are being built as well that are the exciting next generation. And there's social marketing companies, there's recruiting companies like JobVite and Branch Out, which are leveraging some of the existing networks to revolutionize the shape of recruiting. There's also very interesting social commerce companies, everything from Groupon to Shoedazzle to Beachmint, that are all really radically changing how people are shopping.
So on the flip side, are there companies out there that you think aren't going to survive?
Absolutely, and that's part of that's part of the industry, and that's part of how technology evolves. There'll be the best companies will do extraordinarily well, and many of the other ones will not make it. But that's okay. That's part of what makes innovation happen.
Are there any companies or sectors in particular that you're skeptical about?
I think I think that there are a lot of what I call marketplace 2.0 sorts of companies that may or may not be as large as everyone thinks that they're going to be.
And any examples?
No examples, no.
Let's talk about valuations. I mean,
Sure.
As a venture capitalist, you're obviously seeing high numbers out there. Do you think valuations are too high right now?
In certain parts of the growth of a company, yes. And so there's a lot of money pouring into very early stage companies at very high valuations. And that poses a lot of challenges because the expectations of what those companies have to do to deliver good returns becomes extraordinarily high. I think on the other end, the public companies, some of those companies are being valued at growth numbers that require just extraordinarily growth over the next couple of years in order for them to be successful as investments.
So bubble or no bubble?
I think the word bubble implies what we saw 10 years ago, which this is certainly not. These companies, you're not seeing Snowball.com to go public, which has no business, you're seeing actual companies that have real products, are addressing big markets. Now the question is, are some of these valuations high? And that's going to be a function of what we see over the next year or two, whether or not they can grow as we all expect them to.
Well, we will be watching, as I'm sure you will be, as well. Sumeet Jain of CMEA Capital, thank you so much for
Sure.
joining us here
Thank you.
on Bloomberg West.